Donald Trump is starting a trade war with tariffs on Mexican goods, Canadian goods, and Chinese goods, as well as potentially European goods. There is a lot to talk about, and the markets are reacting. We see a lot of downside in the market. The main question is, are the markets crashing? Is this the beginning of the bear market I've been talking about over the last few months, or do we see one more high? We want to take a look at the Elliott Wave charts today. Let's go. Hello and welcome to another MCO video. My name is Ben and today we want to talk about the NASDAQ chart and I also want to share with you the Dow Jones chart. We will analyze them from an Elliott Wave point of view, which means we get a really good understanding of where we are in the larger cycle. And I talked in previous videos about potential bear markets, across the different sectors as well. We talked about crypto, a bear market could be starting there. We're very close to a long-term top. Stock market as well, the NASDAQ, the S&P 500. We covered the S&P 500 on this channel before. The Dow Jones, haven't covered it yet on this channel. We'll do that today. I want to talk about the relevant support levels. These are basically the levels that you need to know to understand whether we are starting a bear market or not. Now, with all of that, obviously it's important to understand we're talking about probabilities here, but I talk about my preferred scenarios for both the NASDAQ and the Dow Jones. Before we do that, we want to understand what's happening around the tariff situation and how could it actually impact market sentiment, because that is what Elliott Wave is about. So let's talk about the tariff situation. I've got an article here from Bloomberg, and now for those of you who don't know what's going on here, Donald Trump is introducing tariffs. He promised it, whether it's good or bad, I'm not here to debate that. That's maybe something for different channels, but it is happening and we have a trade war. People talk about a trade war. We have tariffs that are on World War II levels, so it is quite noteworthy. Now, the tariffs are happening in the US, and he is imposing tariffs on Canadian goods, Mexican goods, Chinese goods. The EU is affected. So we see it here that the new US tariffs, 25% duties on most Canadian and Mexican imports, and raising the charge on China to 20%, apply to roughly $1.5 trillion in annual imports. I mean, in previous videos, like a few weeks back, we talked about tariffs already. We talked about the tariff situation. We talked about how much stuff the US is actually importing and how it could also impact households and what impact it might have. I mean, you can talk about tariffs in a positive and a negative way, and that there's always pros and cons, but what it will lead to is that even though he's trying to get stuff built and made in the US, that is not going to happen overnight. It might be a noble idea, okay, on the surface, to get a lot of goods to be made back in the US, okay? And companies will adapt and they will start to manufacture products there. However, that's not going to happen overnight. So there will be that long period where people will just have to pay more for goods, and most of the people will feel that in their wallets, in their pockets, less money available to buy stuff. So there's going to be that period that can really have a really significant negative effect on the markets overall. And that's what is being priced in at the moment, okay? So we see that across different sectors. Then again, Canada hit back with phased levies on $107 billion worth of US goods, while China imposed tariffs of as high as 15%, mainly on American agricultural shipments. So they're hitting back. It's back and forth. It is essentially a trade war. We don't know where this is going, but there's a lot of fear that's being priced in. Now, last thing I want to show you, and then we take a look at the charts. The tariffs bring American import levies to their highest average level seen since 1943. That's crazy. I mean, that is really, really significant, and it's been a while since the tariffs been that high. Yeah, but it's apparently it's not ending as well. So he said there's more to come, including April tariffs on all US trading partners that have their own levies or other barriers on American products, as well as sectoral taxes of 25% on cars, semiconductors, and pharmaceuticals. So what can I say? I mean, there's a lot happening there, and you have a catalyst, you have something significant, and we all knew that. it won't be boring with Trump being president, especially the first 100 days. Okay, I talked about that in my S&P 500 video that I recorded a few weeks back. But there's a lot happening and the market is reacting. And people tell me, oh, Elliott Wave, market manipulation, Elliott Wave doesn't work. Well, Elliott Wave tells us that we are on the larger time frame across different sectors. We are in a situation where we could form major tops very, very soon. And I'm still in favor of another high for most asset classes, the NASDAQ, even the Dow Jones, we take a look at that. However, when you have a market like that, and you have a market that is very, very close to the end of a major cycle. So this is the NASDAQ, and we are very, very close to the end of this major, major bull run that started in 2022, but actually way before that, because all of this will be corrected from decades back, okay? This is at least my Elliott Wave count. And at the very least, it should be the move up from the 2022 low that will be corrected, because here we have a 5-wave move up. 1, 2, 3, 4, 5. And we're now in the 5th wave. And in the 5th wave, we could get one more high if things go well. That I see this rather as a bonus if it happens than a necessity. I cover in our stock service, you'll find the link in the description, I cover several tech stocks. Stocks like Meta, stocks like Netflix, they could top at any point. They have maxed out not that they haven't maxed out, but they have fulfilled ideal requirements for their larger impulse movements to the upside. So also the NASDAQ is basically at a point where, yeah, surely it could get another high. We have a support area to watch, but it broke already out of this price channel to the downside. So that's certainly not clearly bullish. There is a lot of concern here, and there's stuff being priced in. And my main support is at 19,786. So ideally the price would turn around here, start a final rally in a 5th wave. But that wave 4 is already quite deep. Not too deep to be a wave 4 in a diagonal pattern. It is acceptable. For me, my first bear bull pivot, the first level below which I would assume a bear market is starting, is 19,786. Now bear in mind, we talk about really a very, very long-term bull market that is going to be corrected. So just by breaking one support level, it's not going to be the signal that will confirm for sure that we're entering a bear market. But I've been mentioning in recent weeks and months and even throughout 2024 that we are in a situation where we're really, really close to a long-term top. So risk is high on the macro level. So it takes a little bit more than that. The next confirmation level would be down here at around $18,350, which is the swing high from September 24. That would be the next level that, if broken, would confirm a top. So it's already on here. I mean, I'm looking for one more high, but I need first a reaction to this support area, and that has not happened. That has not yet happened. I haven't seen a reaction yet. We've now arrived at the 50% retracement, 20,260. Let's see if we can get a reaction. Bear in mind also, the move up we're looking for is not going to be a 5-wave move. It's going to be a 3-wave move here. So it's going to be tricky to really determine whether we've bottomed. At the moment, this wave 4 seems to be a flat correction, but below 19,786, it would be too deep to be clearly a wave 4. So what does that mean if we really start a bear market? I mean, I have a problem to really call that clearly the start of a bear market, because the move down from the all-time high is corrective. It's in 3 waves, and also here this move down, it's a 3-wave move to me. So the only way, if it has really topped, it would have to be some kind of a diagonal pattern to the downside. So anyway, if we see a larger 5-wave move down, that would be additional confirmation that we've topped. And then, yeah, I would expect, then next, what is kind of a scenario where could prices go to? I mean, here we talk about support in the 14,500 range, possibly 10,000 range. I mean, okay, we've only been there a couple of years ago. It's not that, but it's a 50% decline. So time-wise, we're not far away, but price-wise, it's 50% decline. That is a proper crash. And if we really are starting a major bear market, then this could only be the beginning. So no, I don't want to scare anybody. Been talking about that. All I can say is the risk is very high in this range, and we're at a tipping point, and we are, let's say, at the end, and we stand at the edge of a cliff. So yeah, we have the Elliott Wave patterns, but they are not. It's not perfect science. They are not a crystal ball. They tell us they tell us what's going on with market sentiment. And if the market breaks below key levels, which is, again, another high is a bonus. It's not a necessity. So if the market breaks below certain levels, and certainly some fundamental aspects can lead to a change in sentiment in a way that it pushes something over the edge of a cliff. So that can happen certainly when the market is at the key level, in a key area where a major top could form. So here, bottom line is, I would still like to see one more high below 19,786. I will slowly stop watching for one more high, and I will start to assume a major top has formed. That will then need to be further confirmed. For example, if the next rally afterwards will be a corrective rally, just a bounce, dead cat bounce, would further confirm that. So yeah, I mean, overall, if we zoom out, not much happened, but we're now at a key spot where we definitely have to be watching the market closely. Now, talking about the Dow Jones, I have not talked about this here on this channel. Just to talk about the long-term chart as well here. I mean, this is also going to complete a major rally here. You see there was a 3-4 pattern in 2008. You see that from 2008 then we have a 5-wave move up that is pretty much complete as well. Yeah. So I've got a wave 1, a wave 2, a wave 3, a wave 4, and this would be a wave 5, which also is pretty much complete, even with an extended 5th wave and an extended 5th wave in the 5th wave. So we are, pretty much at a point where also here a top could form at any point. Now this is the long-term chart. We're going to take a look at the shorter time frame in a minute. So I didn't want to do the replay. Let's hide that. But it's also here important to understand that, look, yeah, that last high, had it formed that one more high, I would be more confident the top has been struck. At the moment, I think maybe this 4th wave is simply extending, and I will share with you the relevant support levels on the smaller time frame. I also just here want to explain, look, we're at a point where if the Dow Jones, I mean, that's a major index, if that tips over, that would be a really good signal that a major top is formed. But top formation is more of a process. It's not like an event. So at some point it will just it happens over time. It's not that, right, we have a top now. You can't confirm it when we have a top. We can only highlight that we're in an area where the risk is really high on the macro level. But on the micro level, the Dow Jones is still comfortably above support. I would say comfortably above support. It's the NASDAQ is already pressing key support levels, whereas here the Dow Jones, after a 3rd wave top in December, we could just be in a 4th wave now. Yeah, we could just be in a 4th wave, and surely it's coming down rapidly, but it's still technically a space all the way down to 40,850. So from where we are now, that would be a 3 to 4% decline. 4% decline. So, it's time to turn around, but actually, if this really is an ABC structure, it will likely go down a little bit lower, possibly test here 41,637 before an upside reversal. And then one more high would be ideal, and I would need a break above the last high here around 44,100 to suggest a low of sorts has formed in this C wave to the downside. Yeah. So this is what I'm tracking at the moment. But also here, I mean, this move down is probably a diagonal pattern in this C wave, and it is probably not complete because we're still holding above support and holding above the A wave low, which shouldn't be the case if we're forming a flat correction. We should form something maybe like a double bottom. The ideal target for a C wave, 100% extension, is around 41,730. Then, as I said, we've got support around 41,630 and then 40,979. So these are the areas I would pay close attention to. When they get tested, maybe there will be a reaction. And yeah, bottom line is the market is pricing in a lot of uncertainty there. A lot of fear is being priced in. It's not yet the confirmation that a bear market has started. I still believe we are in a major topping area, forming a top of a multi-decade long bull market. You can't just say that, like, we've started the bear market. I remember that end of last year at some point. It was around, let's open that. Let's go back to the NASDAQ. I remember that down here. Yeah, it was August 24, August, September. I remember that some analysts already confirmed the bear market. I didn't do that because I wait for confirmation. and it was not the right time to call the bear market. And also here, I need to wait for data to come in. That doesn't mean that risk isn't high, risk is high, yeah. But how to approach this is always a personal decision, and it has to do with personal risk profiles and so on. But yeah, it's definitely a very, very interesting market to watch. We are not yet there where we can confirm a major top, but I will pay very, very close attention to the microstructures over the coming weeks. Come back here to this channel if you want to know more about it and if you want to be kept up to date. You can also check out our S&P 500 service. The link is in the description for daily updates about the S&P 500. But overall, the indexes are moving in very similar ways at the moment. NASDAQ, however, a bit weaker than S&P. So it's important to understand the differences. So yeah, hope you liked the update. Thank you very much. Leave a like, subscribe. Let us know how you liked the video. Thank you very much. Bye-bye.